Good morning, everybody. We're going to do our COT report here for the data that came out on Friday, November 15th. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. Did you guys expect the moves last week and understand what's happening inside of the market? Did you know where to look to see what lever the commercials were pulling? Did you follow the yellow brick road we laid out daily? This is what we'll cover in this week's video and give you the ranges for the week. We always want to pay attention to the man behind the curtain, and as Wyckoff labeled this, the composite man, understanding who's in the market and what they're doing. So last week we had given out our levels, and this is how they played out. We went right through our rotational zone perfectly, just barely flushing it a little bit on Friday, but back inside to end the week. And on Monday, it was Veterans Day. We had slightly lighter volume, and this leads to less supply being in the market, which removes some of the risks. We'll see this play out again around Thanksgiving and Christmas as well when the market has holidays. We were watching for the market to find equilibrium, and we laid out several key pieces. 60-40 was the first area to watch, and 60-13, 12-13 was our low to watch, and we made a move right through our rotational zone and had a couple nice trades long early off the pivot and short later in the day off the pivot. And the big things to watch we laid out on Monday for the week were going to be CPI, PPI, and retail sales. We had also given out on Tesla, because that was the lever the market was pulling, 348.75 and 326 quarter. And you can see how this played out on Monday and then on Tuesday, as we had some nice shorts at that 60-40 level, and then Tuesday at the 5 a.m., right when pre-market trading, about an hour after it starts, and a nice move off of that and our 60-12 level. The plan on Tuesday was that fund managers would purchase insurance for CPI. And if you don't understand that concept, then probably I would suggest dive a little deeper into how this works. Uh, the concept is that this would drive prices lower, so insurance premiums would rise, and then we would bounce into the end of the day, so the insurance providers of the market could cause those premiums to decrease, therefore locking in some profits and going in with less risk for themselves. This led to a balancing day, and insurance was sold that put a floor in the market temporarily, but it wasn't as much as we've normally seen. And that was something we mentioned in our prep on Tuesday. This said that fund managers weren't overly concerned with the risks in the market. And so they were sitting about 50% underinsured. They did get up closer, but we saw the markup, the move lower for the premiums to increase, and then the move up into the end of the day for those insurance providers to de-risk for themselves. And again, these are the levers that are getting pulled in the market. And just like any good magician, the market makers and the commercial side of the market is really good at misdirection. So Wednesday, fund managers did find that Goldilocks of protection as we balanced, but they left the market underinsured for PPI and Powell. And this led to the tail risk on Thursday. But on Wednesday, we laid out some key factors for you that there was a 31.52% increase in volume the prior day. This showed that even though the 6 of the last 7 days had been on decreasing volume, now traders are ready to engage and money was being deployed. Tesla also failed at the open at our critical 348 level and made its move lower. And this was one of the signs that we were going to see a rotational day or downside. As long as we held that 326, it was rotational. And so we made the move down and held for the day. Thursday, we laid out that Chicago and New York, this was going to be moving day. And so back to insurance, before we move on here, this opened the door for that tail risk. And you can see at the open, Tesla breaking down. This is the lever that's getting pulled and the market breaking. And on Powell's hawkish commentary, the market began its trek lower on the day that we expected a move outside of our range. The Tesla aspect of this, when it lost that 326, it removed the support from the market from the strongest Magnificent Seven stock since the election. In the ES, we were looking for a range break, and we got that, and the extension was to the downside. And then Friday, we had the final wizardry in the market here as we knew at the end of the day on the 14th that 59.30 half, so 30.5 was our key level. And you can see our final bid in the market. We had one at 22 to 27 and then one at 72 to 82. And when we lost that first bid, market was making its move down. We had laid out that 59.10 to 12 was going to be your big area to look for shorts, and right into the big commercial bid again, right into that 72, 77 area where the market was going to bottom. And this is, again, we knew this on Friday morning, and you can see we bottomed at 31 into London Open before bouncing for a nice 20 points. So if you can access these tools and know where the market is positioned, know who's in the market, you can then see behind the curtain and know what levers are going to get pulled. And then just to show here again on Tesla, when Tesla was below its 326, it made a push until 1130, which was right here, another re-entry at our 59.12 area. And when it failed at 326, again, your signal that the market was going to continue much lower. And so for the week ahead, commercials are still net short. We are seeing an increase in open interest, which tells us, again, there's more capital being deployed, and we can now start looking for a little bit more strength in our moves and watch which direction we're going to go. For the week ahead, we're looking for rotational price action between 59.84 and 58.33 with our pivot at 59.15. Over 59.84, we're going to target 61.03 with our pivot at 60.60. And below 58.33, we are going to target 57.25 with our pivot at 57.66. There are many catalysts and key pieces to watch this week, so be sure to stay tuned for our daily prep sessions. And don't forget to like and subscribe if these are leveling up your trading game. We would appreciate it. Have a great day. Safe trading out there, guys.